to the Ichimoku charts.com daily analysis of the Euro US dollar FX for Tuesday, October 2nd, 2012. Well, a change of trend to the upside today and a candle with a higher high and a higher low. Previous day's trading we had a spinning top candle that began a new first time frame downtrend, but we had very solid upside price rejection from below the 128.57 level. Very strong support. It has held as support for the previous 1, 2, 3, 4 trading days prior to today's trading. It's little wonder that the buyers have come back in. The buyers did close with a weak form of control for yesterday's trading, and today they've been strong enough to take out the previous high. Now today the market has tested to the strong resistance at 129.68, and that has been tested in the recent past for 3 of the past half a dozen days. And we did see strong downside price rejection from there, with the market closing down just below the low for this to be a neutral market where neither side has really taken control, or if anything, the sellers have a moderately very weak level of control when the market closed. We do, however, have another white body candle, and that might be important for this market. It means that the buyers have made some net bullish progress, and a continuation of the bullish progress they made for the previous day in net terms between the open and the close, and they have to a degree maintained some upside momentum, but remembering that they did lose commitment up around the 129.68 level, and they did fail to close with control of this market, and that is important. The market has, for the previous day's trading, also found support at the trend line that I've drawn here based on these peaks and troughs of this very strong first time frame uptrend. So there is potential for this market to go on with this move, but we would need to see a bullish close up above 129.68. In terms of the stacked trend channels that I've drawn, with this market finding support down around at the trend line here, and the market changing trend to the upside, if we do see the market trade up above the 129.68 area in a bullish way and above the 130.25, we do have a target with the trend channel at the moment up around the 131 level, and as the trend continues, if we do see the trend continue to the upside in the first time frame, that target will be increasingly higher and higher, so we do need to be aware of that. In terms of the Fibonacci extension, now the market is trending up in the first time frame. We're comparing the current first time frame uptrend to the previous time the market was trending up, and here we see strong downside price rejection from above the 100% level at 129.33. So this could be an important day where we may not see follow through by the buyers that attempted to push the market up above that level. We don't see any strength from the sellers in a major way, so there isn't any sign that the trend will change, but we do need to be aware that that is a significant loss of commitment by the buyers, and there is potential for a change of trend to the downside. Also, with the Fibonacci retracement here, we've seen the market rejected from the 100% level in a strong manner, and that also suggests that there is a possibility of a change of trend to the downside. In terms of Ichimoku, we have a bullish market in all 3 timeframes. In the higher timeframes, the market is trading above the cloud, so we're bullish in the long-term timeframe. We're trading a long way above the cloud, so the market is still looking overextended. But as with the equities market, as we move further and further along into the next week or two, the market will find strong support around this part of the cloud if we don't see any sell-off at the moment, or if we don't see the market trend up strongly. And I suggest that we may see more congestion over the next week or so, and the market come to meet the cloud and find support there. In terms of the medium-term time frame, the market is bullish again by trading above the Kijun-sen, and that Kijun-sen has been pointing flat, and the market was attracted back towards there. But we remain bearish in the short-term time frame by trading below the Tenkan-sen. We have been for almost 2 weeks now, so if we look at this, the market has tested to the Tenkan-sen for the previous 3 trading days and found resistance there. The buyers are losing commitment, so moving forward tomorrow, the market is trading very close to the Tenkan-sen at the moment, and it will offer itself as very, very strong resistance. As I've mentioned, 129.68 is strong resistance in this market. It has been tested very recently for 3 of the past, or 4 pretty much of the past 5 or 6 trading days, so it is strong resistance. But we also have strong support at 128.57, and then the trend line here is very important as well. It may offer itself as support at around this 128.57 level, and we also have the Kijun-sen trading roughly in this area. So this zone around the 128.57 and just below is a very, very strong area of support. We also have strong support down below where the market's trading in this large zone shaded in grey, and if we do see the market sell off, then that will most likely be an area where we will see buyers come in. It was a large zone of previous support and then previous resistance, and certainly should hold again if the market does trade down. But at the moment we have a market trading between the Ichimoku indicators here, between the Tenkan-sen and the Kijun-sen. If we do see a bullish breakout to the upside or a bearish breakout to the downside, there may be resolution of this congestion that we're seeing, and we may see one side take control of this market, but bearing in mind that there is strong resistance overhead and strong support down below.